Good day traders, my name is Damien and I'm the host here at the Road to Eldorado Investing Club. In this video we're going to make an analysis for the price of gold and I will explain to you why the price of gold can reach levels of 3000 or above in the next few months. For you to understand this, we're going to discuss a couple of important technical analyses, look back at some history and mention some fundamentals. So let's get it going. Now over here we're having a chart for XAU USD gold, and initially what we're going to do, we're going to look at a very long-term graph on a 1 week time frame like this. Now we're going to zoom it out like this until we can see the price of gold between 2011 until today. This is a chart that's covering 12 years. Over here, some of you more familiar with technical analysis may recognize that we're getting a massive technical formation. This massive technical formation is known as a cup and handle. Here's how it looks. So we need an arc and we place it between this high point in the price over here, horizontally to the level where the price reached it again over here, and then we stretch the arc to the downside. This is forming the cup of the cup and handle formation. Then with a couple of trend lines over here we can indicate where the handle is located. This is the one. Now what this chart pattern suggests is that once the price breaks out of the handle, it can produce an increase to the upside, which is equivalent to the distance between the horizontal line of the cup and the lowest point in the cup. So we are going to measure this by grabbing a price range tool from over here. We start the measurement from this horizontal line and we go to the lowest point, which is down over here around 1050. This indicates a potential movement of $870. So what we do now, we take the same measurement and we measure it from the breakout point, which is back over here, to the upside. Let's see how this is going to look. We take this measurement tool, we place it over here, and we measure this $870. It's around over here. You can notice that this is setting a target for gold of a bit over $2,800. From the current moment, this is a potential increase of about $850. Now, it's important over here for us to zoom in a bit on the handle and discuss it. You see, this formation, this massive cup and handle formation, is something that's been visible for quite a while and a lot of people have been expecting it. If you've been trading long enough, you might be aware that there is an unwritten rule when it comes down to financial markets, and this rule states that the more obvious a specific movement is, the more difficult the market is gonna make it for people to catch. What am I saying with this? You see, back until over here, I'm gonna use the replay function like this. We had conditions to believe that the handle was actually looking like this and that the price did an effective breakout over here. As we know, moving further, the price back then started fluctuating up and down, and it's been doing this for quite a while. And in the process of doing so, on a couple of occasions, the price reached this major high point from over here, which was located around 2070. It did it once over here. And then, for example, it went down, correcting back to those previous major low points here at around 1680. From there, it started fluctuating up and down, produced another increase, which eventually took it back to those same previous heights, this time just a bit higher at about 2080. And since then, it started swinging down again. What we've been having here is that for about 3 years now, the price has been doing this massive sideways consolidation movement, as you can notice. And the reason why it's happening is because a lot of traders and investors have been aware of this pattern and the potential that it holds, and they've been trying to capitalize on it. Now, if you are not aware by now, the market works in such a way that it makes those movements convenient for big and long-term investors like banks and hedge funds, but it makes it very inconvenient for retail traders. The reason for that is the retail traders most of the times enter with the idea to catch profits in a relatively short period of time. And over here, the market was devastating for most of the retail traders, as not only didn't produce the movement that was expected even back over here, but it kept on making those massive swings up and down, which has been liquidating a lot of traders that didn't have proper risk management, frustrating other people who didn't have the necessary patience, and putting a lot of people in a position where they were questioning the reliability of this projection. Now, in a bit, I'm going to tell you why very soon the price might finally break out effectively above this resistance over here around 2070 and produce this long expected movement to the upside. Before that, I want to tell you that this is not the first time that gold is forming a massive cup and handle formation. There are two more important occasions in which the price of gold did this, and I'm going to show you both of them. Over here, we're looking again on gold, but this time we're looking back in the period between the year 2000 and 2003. Again, we're having a massive cup and handle formation. I'm going to draw it for you so that you can see it. So this is the cup right over here, and in this region, we are getting the handle like this. This is the handle. Now the price did a breakout over here for the first time, and this was indicating a movement to the upside equivalent to the distance between the high point of the cup and the lowest point of the cup. So let's measure how this is going to look. First we measure the cup movement, so high to low. Back then we were talking about nearly $68 of an increase. 68 may not seem like a lot today, but let's not forget that back then the price was just around $320. So having that in mind, what we need to do is to measure this movement of $68 from the breakout point over here. So measuring it to the upside, it gives a target over here right around 380. Now again, back at that time, this movement was colossal for gold. To give you some comparison, it would be like the gold moving today from 2000 to something like 2500 or 2600. Let us see what happened. Now the price started fluctuating up and down. You can notice that over here there were few months of fluctuations up and down, which even back then made many traders give up in the process. But here the price finally broke up effectively and started increasing to the upside. It kept on moving. You can notice over here there were 2 months of a consistent increase, a small correction here, and finally a big jump that took the price close to 390, reaching the target from the pattern. Now, it's a very good indication knowing that gold had similar conditions like today back in the past and that it reached the expected target. But what I wanted to show you here is not only that it reached it, but it managed to also surpass it. Look what happened. The price did a very massive correction, yes, back to the horizontal line of the cup over here. But after that it started fluctuating, and then over here it jumped to 430, and moving further in time, here it got to 450, and here it did a colossal explosion that took the price as high as 730. there was another massive pullback, and then another huge explosion, which took the price as high as $1,030. Now, I just want to give you an idea why this is so important. First, you need to understand that back then, a price of 1,000 for gold was unthinkable. Also, this pattern over here was indicating a huge movement, but that huge movement was just about $70 of an increase. Instead, the price went up $650 from the entry point given from this cup and handle. This means that the price went up 9 times more compared to what the pattern was suggesting. I want to give you one more example. Now, because the data on this chart over here ends back at 97, we're going to use a different chart to show that. Alright, so here we're looking on the investing.com chart instead of TradingView. A reason why we're using it is because on investing.com you can go significantly more back in time if you want to read historical data. Now, what you have over here is another situation of a massive cup and handle. Back then, the charts weren't as clear as they are today, but we can easily visualize where this cup and handle was located. So, I'm going to indicate it for you. First thing, we're going to take an arc over here so that we can indicate the cup of the pattern. We're going to indicate it like this. So, this is the horizontal line of it, and obviously over here is the low point. Now this drop that you see over here was forming the handle. Back then we're going to indicate it with some lines like this so that you can see it. Over here you can notice that there was a breakout to the upside, and similar to the other two examples that I gave you, this was projecting that the price can go up with a movement equivalent to the distance between the horizontal line of the cup down to the lowest point of it. This was giving a projection of a bit over $83. So what we gotta do now, we need to measure this same movement to the upside. Going from the breakout, which can be taken over here, we measure this movement up. Back then, the expected target for the price was close to $270, with an entry given around 190, which meant a potential increase in the price of about $80. Now, considering that the entry price was just 190, this meant a possible increase in the price of nearly 50%. So let's check what happened. Moving a bit further, you can notice that with some fluctuations up and down, the price kept on moving to the upside, and eventually it reached the target set from this pattern. So having that set, moving further in time, you can notice that the price didn't stop there, but it actually went up exponentially. Over here, it reached $400 for the first time in history of gold. But it didn't stop there. It kept on climbing up. Over here, the movement was already exponential, and the price ended up reaching a level of $835. So again, like in the early 2000s, back in the 1970s, the gold produced a huge increase following a cup and handle chart pattern, which not only reached its original target but went several times higher than that. The price was supposed to increase with $80 according to the pattern, but it ended up going from 190 to over 830, which is $640 of an increase. This means that the price went up more than 7 times than the movement that was expected. So let's go back to the present situation. Going back to the present chart, looking at historical data, you can notice that this pattern had happened in the past, and it has proven itself to work very well for gold. Now this time, it's more difficult to catch it compared to back in the 2000s, and in the 2000s it was more difficult to catch it compared to back in the 1970s. The reason for that is simple. I already mentioned to you that the more obvious a movement becomes, the more difficult it becomes to catch. For those of you that have been trading Bitcoin and have benefited from the bull runs, you may know that all of the three major crypto runs that have happened since Bitcoin was released were very similar in structure, but with every consecutive one, it was becoming more difficult for the retail traders to catch them. So, looking at the current situation, we already said that this cup and handle pattern suggests that gold can go up and reach over 2810. But if we think about the historical data, gold has proven to go many times higher than the expected target of those cup and handle formations. In the 1970s it was 7 times higher, while in the early 2000s it was 9 times higher, an average of 8 times more. Let us ask the question for a moment of what can gold do if it goes multiple times higher like it did before. Considering that in the past it did between 7 and 9 times more, let us assume that this time we're making a projection for 8 times, in the middle of the two. Over here, the potential increase that we are projecting is about $850 of an increase. But assuming that the price does what it has done before and it increases 8 times more, this means that we're getting a projection of a potential $6,800 of an increase, which is then setting a target of $8,770 for gold. I know that this may sound unbelievable to most of you, and the truth is that gold has never been anywhere near those levels before. But if you think about it, back in the previous two such cases that we've discussed, the movement that happened after that was also unthinkable for the time before. There's also a lot of fundamental factors which are opening the doors for the possibility of gold going with thousands of dollars up, but this we can discuss in another video. Let me know down in the comments if you would like me to give you a long-term, detailed, fundamental analysis on gold. Zooming back to the current situation over here, you see, even though there is such a huge potential of an increase, I'm not telling you to try catching all of it. You see, even if you can catch simply the target from the cup and handle pattern up to 2800, this would be one colossal and extremely profiting movement for you. Even if you catch just half of it up to about 2400, this is still going to be extremely profitable. The one major question we gotta answer over here is, why should we think that gold is going to go up now instead of continuing to move sideways like it's been doing for the last 2-3 years? To answer this question, I need to show you another extremely important technical analysis, so I'm gonna get it ready and get back to you in a moment. Alright, now for the second part of our long-term analysis, we're gonna use the daily chart for gold, and over here we're observing the last 10 years, starting back in 2013 over here. Now on this chart in front of you, I have indicated 10 periods. You can notice them between each of those couples of blue lines. Each of those periods is starting from the beginning of December. And what is the common thing between all of them is that every December the price of gold starts rallying to the upside. Now those rallies typically last different. The shortest one is just a bit over a month, while the longest one continued for about 4 months before making a more significant correction. And still, the smallest of the increases is about $100, while the biggest one is about $300. Starting from this first period, over here in the beginning of December, the price was about $1,220, and it increased over $160 by the middle of March, reaching around $1,390. This was over 13% of an increase. You can notice that initially the price dropped a bit, but soon after it recovered that and went much higher. The next one happened between the beginning of December 2014 and end of January 2015. Over here, the movement started from 1,150 and went all the way up to 1,310. Increase was about $160, close to 14%. Here the price went straight up, corrected a bit, but didn't go into the negative, and then went higher. Then we go to one of the largest increases, 2015 to 2016, an increase of $220, which was over 20%. After that, we're getting one of the smaller ones, $94 of an increase between beginning of December 2016 and March 2017. You can notice that over here the price actually dropped lower before reversing to the upside. Now, one thing to mention over here is that even though for the last 10 years, entering at the beginning of December has proven to be very profitable, if you go in some more precise technical analysis, you may end up finding a better entry point a bit before the beginning of December or a bit after it. Like over here, if let's say you were to enter around the low points, which was around the middle of the month, then you could have caught a movement of $130 instead of the 94. So moving further, 2017-2018, increase was again about $94. Next one, 2018-2019, 125. Then one of the very big ones, 2019-2020, the price went up $244, and as you can notice, beginning of December gave an entry almost at the lowest that the price reached, and since then the price was going straight up. 2020-2021, $184 of an increase. This one was a very good increase, even though it's not the biggest. It happened in the shortest period of time, just a bit over a month, and again the price was moving straight up. The entry over here was perfect. Then next one, the biggest one, beginning of December until beginning of March, that's 2021 to 2022, price went up $300, and as you can notice, again the entry was perfect. Even though there were some fluctuations in the price, we can say that it was following a general exponential increase. Last one we can observe is 2022 against 2023. Increase was $190. The price went up from around 1,770 to about 1,760. This was nearly 11% of an increase. Now, for this one, if you've entered in the beginning of the month again, you would have encountered only the price moving straight up. But what is typical about this one is that it was giving a very obvious entry back in the beginning of November, which a lot of people were able to spot. And the ones that entered after this initial breakout over here managed to catch a bigger increase of about $280. So moving to the current situation, we can notice that in October the price of the gold was going up. It reached the 2000 resistance, corrected a bit, and since the beginning of November it's been giving some indication to the upside. A lot of technical and fundamental analysis point to the possibility that the price of gold can start rallying again around the month of December. Now, if we look at the last 4 years, we can notice that the price of gold started producing some substantially higher movements compared to before that. We have around 250, 180, 300 and 190. This is an average increase of about $230. There are some fundamental reasons which I'm going to mention in a bit, but looking at the current price, assuming that it stays in this region until the beginning of December, if the price is to produce an increase of this average $230, this can set a projection of at least around 2,190, 2,200. Now, going back to the massive cup and handle pattern, if this is to happen, the price is going to go above the resistance it created around 2070 back from 2020. Let me clear all of this. So the resistance we have in mind is the one located right over here. If the price is to go up and break above it going towards the 2200, we're going to find ourselves in a position in which the price doesn't have any other resistances above that level, simply because the price has never been at such a level before. This opens the doors for the price to go up with a very strong pace and quickly target the 2800 level that we said is targeted from the massive cup and handle pattern. Assuming that the price of gold does what it's been doing in the previous two such occasions and it goes exponential, then as we've mentioned earlier, the number suggests that gold can reach over $8,000 in the next couple of years. Now briefly I want to explain to you what are the primary fundamental drivers on gold. There's two primary things you gotta take in consideration. The first thing is that the gold very often moves opposite to the dollar. If the dollar is dropping, the gold goes up, and if the dollar is gaining, the gold drops down. The other primary driver for the gold is the global stability or respectively instability. You see, gold is considered to be a safety asset. This is where people place their money when they think that their liquid capital or assets might be at risk. This usually happens in times of global uncertainty. I did told you that since 2019 the price of the gold has been producing substantially higher December rallies compared to before that. And we have multiple fundamental reasons to confirm that. Back in 2018 and especially 2019, there was a lot of economical tension between US and China because of the so-called trade war and the sanctions that they were exchanging. They reached a deal in the beginning of 2020, but a couple of months later, coronavirus hit the world and there were multiple pandemic waves which were bombarding the global economy. As the coronavirus pandemic started getting under control, the military conflict between Russia and Ukraine began, which led to even more uncertainty. All of this is one huge combination of factors which have been causing global uncertainty and creating circumstances for an increase in the price of gold. One last thing to add is that all of this uncertainty caused conditions for a recession, which led to a lot of economical stimuluses, and those stimuluses led to high levels of inflation. Now, long story short, high inflation means that the currency is losing its value. In other words, the dollar has been losing a lot of value and has perspective to lose more value. As we said, if the currency loses value, eventually this can push the price of the gold up. So I will tell you that all of those conditions we listed were present in both of the previous occasions where the price of gold skyrocketed and they aligned with the massive cup and handle chart pattern. But also I'm going to add that this time the conditions are much more extreme compared to the previous two occasions. In essence, comparing the current gold opportunity with the previous two such cases, the one we have right now gives even more potential. Let me know down in the comments what you think of this gold projection, and also share with me if you would like me to go in more details regarding the fundamental side of gold and how fundamental analysis gives even more confirmation of this potential bull run. I'll see you next time.